Welcome to No Flipping Excuses with Jason Lucchesi. Jason Lucchesi was the guy voted least likely to succeed by his high school peers. Today, Jason's a real estate flipping ninja Jedi Knight assassin who's taken his drive, street smarts, and never give up attitude and converted them into a real estate flipping business and freedom-based lifestyle. Here to share the truth about flipping houses, finding sellers, delivering buyers, real estate investing without the reality show hype, and all-around general business badassery. Your host, Krav Maga enthusiast, husband, and father of three, Jason Lucchesi.
Hey, what's up? It's Jason Lucchesi, and welcome to the No Flipping Excuses show. I am super excited that you're here with me today. I've got a good friend of mine with me, and he is crushing it with apartments. And this is our first time going and diving deep into apartment buildings. And the individual that I'm going to share with you in a second here, he's doing some incredible things. And one of the best things in real estate is to really dive in when it comes to passive income. That's where the longevity is for this business. And I wanted to get Tim Bratz on here from Cleveland so that he could share what he's doing in his business today, because let's all face it, there's a lot of money to be made in commercial real estate, a lot more than residential real estate. I'm not saying residential real estate is bad at all, but commercial real estate is definitely the avenue to go down, especially for longevity and large profit checks. But without further ado, I want to introduce you to my friend, Tim Bratz. Tim, how are you doing today?
What's up, brother? How you doing, Jason?
I'm doing good. Thanks for being a guest on the show. I know our schedules were kind of crazy for getting you on here, but we got you on here, man. And you're the first person to be on the No Flipping Excuses show to talk about apartments. So cool. For folks that don't have a lot of familiarity with you, and don't know your background, I know you're doing tons of crazy stuff on Facebook and people are watching all your stuff. But for those folks that aren't connected with you, tell them a little bit about yourself. What's your background and how long have you been in real estate?
Yeah, man. So first of all, appreciate you having me here, and love to share the story and hopefully inspire some people. So, I got involved in real estate, or I noticed real estate 2003 to 2007. I was going through college at the time. I'm 32 now. And, everybody's like, market's going crazy. If you want to make money, get involved in real estate. And that's kind of what motivated me back then. So after college, 2007, I got involved in commercial real estate in New York City. My brother lived out there, told me I'd go shack up with him. And a couple of young bachelors living in a studio apartment. I'm just trying to hustle and make some money. So got a job doing commercial real estate and essentially brokering leases for retail space. And I brokered a lease on about 400 square feet of space in the Village. That's kind of a cool, trendy area. 400 square feet. And we signed a lease at $10,000 a month for 400 square feet with 4% escalations annually.
Wow.
And a 12-year lease. And so I'm brokering this thing, and I'm doing the math just to figure out how much this guy's going to make on this. And essentially, this landlord is going to make around $2 million for doing something one time. He's going to get paid on it every single month, over and over and over again, until the lease was up, and $2 million over time. And I'm like, man, I'm on the wrong side of the coin. I need to be owning real estate instead of brokering real estate.
Right.
And and that didn't even include the 7 other retail spaces he had and the 15 stories of apartments above it. So I decided I want to become an investor, and I probably dove into all the same guru seminars and courses and 3-day, all that stuff that a lot of other people have done that are listening to your podcast right now. Spent a lot of money on that, and it was a bad winter. I decided to move down to Charleston, South Carolina. Didn't know anybody, and this is an '08, right when the market is tanking. So started looking at real estate, gotten involved in that whole analysis paralysis phase, and realized I'm not going to actually learn about real estate until I actually do something and buy a property. So didn't have any money, had about $8-9 grand saved up from brokering deals up in New York. And then I had a credit card, and I heard that you could increase the limit on your credit card if you just called up the credit card company. So
yeah,
I did that and asked them for $100,000 increase on my limit. I was 22, 23 years old at the time. And
Nice.
never had, I don't have a car loan, I don't have a home loan, I don't have anything other than this credit card that's been open for like 12 months. And they laughed at me. But they gave me $15,000, 1-5.
Wow.
And I found the cheapest house in the entire MLS was $25,000. Made an offer on it, went back and forth, got it for $14,000, and then I did all the work on it. I changed out the carpet, I changed out the fixtures, I painted the inside, painted the outside, did the landscaping, and printed out some flyers and made some signs and held an open house. And I sold the house, knocked on doors, sold the house to a neighbor who bought it. And I made about $13,000 or $14,000 in like 75 days.
Nice.
And this is after the market tanked, and this is summer of 2009, and about 9 years ago.
Nice.
So it was my first deal. I'm a punk 23-year-old kid. I don't know what I'm doing, and I don't have any money, and it's the worst real estate economy in the past 80 years, and somehow I'm making money doing it. So did it again, and eventually met people with money who put up the cash, and I did all the work. I probably gave up about 50 to 70% of my first 300 transactions.
Wow.
That I did. But I realized that, nobody's going to lend money to a punk 25-year-old kid. So you got to give up a little bit
right.
in order to make the returns enough for people to want to do business with you. And they saw my work ethic and they liked that, but I didn't exude the confidence that maybe I do now because I've done so many deals. Back then, I didn't do a lot of deals, and I realized I need to build up the resume and get some deals under my belt before I could then posture up with lenders, before I could posture up with banks, posture up with sellers, and get better deals. So it helped me build a resume, and then eventually I was able to kind of do my own thing. For the past about 36 months, I've been doing my own thing now, and I'm up to a little over 1,300 units. I think I have 1,321 units, and across 5 different states. And we have another couple hundred under contract to close in the next 90 days.
Nice.
So we got some cool stuff going on. Hope to be at like maybe 1,800 units by the end of the year is the goal. And again, that's all happened in the past 36 months for the most part.
Nice.
And my portfolio value today is worth about $85 million. By the time, by the end of the year, let's out, it'll be north of $100 million. So pretty pumped about that. The idea is to take it to $1 billion.
That's awesome, dude. So you initially started with residential properties, right?
Yeah. I think there's this fallacy in our minds. It's not real, but I think a lot of people get into it. That they get into real estate because they want passive income. You started out talking about that. Like that's the allure of getting into real estate. Doing something once, getting paid on it over and over and over again. Creating this residual, creating this cash flow, creating that mailbox money that, if $10,000 a month coming into my mailbox, I can go spend it all this month. And guess what? It happens on the first of the month. I get another $10,000. I spend it all again. I deplete my account every single month, and they just keep on filling it back up. Like that's the allure of getting involved in real estate.
Right.
But then we all go down this path. Like I can't get involved in commercial real estate because I don't have the money, because I don't have the balance sheet, because of all these what ifs and these stories that we make up in our heads. And they think that I need to go out and do the transactional stuff in order to make enough money to then get into the passive stuff. It's not really the case, but that's what I fell into. I got into it because I wanted the passive income. So I got doing a lot of transactional. I've done a ton of wholesaling. I've done a ton of turnkey, probably flipped 200 turnkey houses in the past 2.5, 3 years.
Nice.
And a lot of retail flips. Then I got into apartment buildings, and about 12 months ago, I had a few hundred units. I had about 300 or 400 units 12 months ago, and looked at where I was and where I was spending all my time on, and where the majority of my wealth was built. And I realized that literally 90% of my wealth was coming from my apartments, yet it only took up 10% of my time.
Yeah.
And so I'm like, what if I dedicated all my resources, my entire team, instead of focusing on finding single family flips and retail and turnkey type stuff, what if we just shifted over to apartments and only look for apartments?
Right.
And that's what we did about 12 months ago. We're buying almost about 100 units a month, just by putting it out into the universe. It's funny how the universe responds. You got all these fears and stuff that pop up, and you're like, I don't know, can I do it? What if? And eventually what happens is, the universe doesn't respond unless you make a really hard commitment and draw a line in the sand like that. And that's what I did. And just, it's amazing what kind of doors open up and what kind of joint venture opportunities pop up. And the lenders that come out of the woodwork who are more interested in the bigger stuff than in doing small stuff. Like, $50,000 deal doesn't really excite anybody. $5 million deal gets people excited,
For
so
sure.
it's easier to raise money on a $5 million deal than it is to raise money on a $50,000 deal. It's crazy.
Sure.
It's so like counterintuitive to what we think, but it's the reality of the situation.
So, Tim, let me ask you this: like, when you were making the transition from residential and commercial, and one of the things I really want to point out is, Tim and I were at a good friend's event last week. And I heard him talk about the whole universe thing, and not a lot of people talk about that. And it's so true. I heard him talk about that. I'm like, oh wow, somebody else is talking about that as well, because not a lot of people talk about it. They think it's like some foo-foo thing, but when you really put it out there, and I really liked what you said about you have to sacrifice and you have to be willing to put forth the effort, and like you said, draw a hard line in the sand and really put forth the effort, and you will get to where you want to be, and you will see the results that you want. But unless you're willing to put forth the maximum effort, now, one of the things that can be scary for folks going from residential to commercial is the numbers. Because you have to talk about vacancy losses now, debt services, you have to talk about all these other miscellaneous expenses to come up with, cash on cash returns, net operating incomes, finding out cap rates, all that kind of stuff. What was it for you that kind of triggered, like, obviously the numbers, a deal that's $50,000 to $5 million. Yeah, that's going to be super attractive. But what was it for you that, made you get over that fear, that, that uncomfortable stage from going from residential to commercial?
Yeah. So first of all, I think a lot of that is bullshit. I think a lot of it's a very convoluted, very like confusing industry to get into commercial real estate. At least and everybody uses big words. Dude, I'm a simple guy. Everything I do is at a third grade level. I don't understand it at a third grade level. And if I can't explain it at a third grade level, I don't do it.
Yeah.
So for me, looking at commercial, it was always like this thing that was out of reach for me. And I never, maybe believe myself, whatever it was. Like, I was like, oh my God, like it's so confusing. You have to be educated. You have to go to these courses, and you have to go to Cornell in order to take the real estate classes in order to get into the commercial stuff. And dude, it's all bullshit. I think it might be something that the wealthy do to just keep the poor and keep the rich, because it's not that complicated. Like, if you can do a profit and loss statement, an income statement on a single family house, it's the exact same thing
Right.
on an apartment building, except you're adding extra zeros. That's the only difference. And so the numbers play out the same. So if you're doing it the right way, like my calculations are based on what's my gross potential rent. Okay, that's the income. And then I subtract out a vacancy rate, whatever the natural vacancy rate is. If you say it's 5% or 8% or 4%, depending on wherever your town is. And then you take all the expenses. What are the taxes? Look them up. What's the insurance? Get a quote. You can find out what management is by calling local management company or running the numbers and seeing what it would cost to handle it in-house.
Yeah.
Utilities, you can get that from the seller. What else am I missing? And then a maintenance reserve.
Right.
So maintenance can really mess you up. That's like the only big variable that you don't know about. And depending on the size or the area of the country that you're in, and the age of the apartment building or the age of the office building or whatever, and the type of tenant that you have, who's responsible for all that stuff. Like I buy primarily apartment buildings, but I do have some office, I do have some retail.
Yeah.
And I do have some vacation rentals. So like maintenance changes depending on the asset class. But the reality is I renovate the shit out of my buildings on the front end to make sure that I minimize all the maintenance on an ongoing basis. So I just go in with the expectation that I'm doing roofs, that I'm doing plumbing, electric, all cosmetic upgrades, parking lots, windows, mechanicals, and I do all that on the front end. So then I have very predictable maintenance schedules on an ongoing basis. I didn't do that early on, and I live in Cleveland housing stock. Like, Cleveland was a big city. It was like, I think, the 5th or 6th largest city in the country.
Wow.
110 years ago. And so it's where Rockefeller's from. It's where Carnegie had a place here. There was a lot of industry here in Cleveland,
sure,
100 years ago, and so it was a massive city, and it got built up pretty significantly. So the housing stock is like 100 years old or 110 years old. And so if you don't make all those improvements on the front end, the maintenance will just nickel and dime the hell out of you on an ongoing basis. So I kind of learned my lesson on that. And I just overborrow on the front end in order to make additional improvements and capital improvements on the property. And then I just kind of amortize that out, or I just, figure out what that's going to be over time and make sure that the return on investment makes sense to do that. And if it doesn't, then I just don't do the deal. But going back to like the income statement, you take the income, you minus out all the expenses, and then you have the net operating income. And I buy based on a cap rate. I don't give a shit about cash on cash. I think that could be completely misconstrued, because if you get 100% financing, or you put $1 into the deal, and your cash on cash return is infinite, or if you put no money in the deal, it's infinite. That doesn't mean it's a good deal.
Right.
You can pay $10 million for a building that's only worth $4 million, but because you have no money in, it's an infinite return. That's not the case.
Right.
So I buy based on cap rate, which is taking the net operating income and then just divide it based on whatever kind of return on investment you want. Cap rate's the same as return on investment. They just call it cap rate in real estate. So if I have a net operating income of $250,000 and I need a 10% return or a 10% cap rate on that, then the most I'd be willing to pay would be $2.5 million. Does that make sense?
Yeah.
And then you take the maximum allowable offer, and you subtract out whatever your renovation cost is, or I'm sorry, that's your all-in price. Then you subtract out whatever your renovation cost is. If you're going to put $500,000 into the deal, then the most you'd be willing to pay for that building as is would be $2 million. Does that make sense? So it's the same thing as like,
totally,
what's your ARV? Just a different way of calculating the ARV for single family than commercial. Commercial is 100% based on income statement and what the net operating income is. And ARV is based mostly on comps. But you calculate, once you have whatever the ARV is, then you subtract out whatever your renovation cost is, and that's your maximum allowable offer. And all I did is I just took exactly what I was doing in single family and rolled it into commercial. And here's my secret. I did that, and then I sent it over to my commercial mortgage broker, and I said, hey, can you get this thing financed? And I know that he's going to be able to underwrite it, and a bank's going to be able to underwrite it more than I ever could.
Yeah.
And they'll finance it. That means it's probably a pretty good deal.
No, man, that's awesome. And one of the other things for folks is when I got involved with real estate back in 2008, I bought a bunch of the training programs as well. And, one of the things is it really, the individuals that do teach apartment stuff, they make it extremely complicated. And even like when we're doing package deals and people ask us, like students ask us, like, how do I evaluate it? I'm like, the same way you would if it were one property. I look at 40 properties the same exact way as I would look at one property. And so many people make it so complicated. It's like when we started doing package deals, profits went up, they shot up dramatically. And we're about to start getting more into apartments and self-storage facilities. And it just makes so much more sense. It's the same exact look, the viewpoint that you can from a residential single family property. So you bring up some really great points that I'm glad you did, because folks need to know it's not as complicated as folks put it out there to be. We go off of cap rate too, because that's the only way that I look at it, is the capitalization rate. And here in Indy, it's going to be different across the board, like you said, for cap rates. But you mentioned something too, and I'm glad that you brought it up when we were at our mastermind last week. And you haven't really put any of your, well, actually, you haven't put any of your own liquidity into these deals, right? You've raised it all through private money and through banks, correct?
Correct. So, I bring in bank financing for usually 80%, and then I raise the other 20% plus some operating capital from private investors. And the reason I do that is kind of twofold. One, I lend my money to other people on commercial stuff, and I borrow money for my deals. What that allows me to do is get in the mindset of what a private lender is looking for.
Sure.
And then I can kind of empathize with them and feel what's fair? How would I lend my money out? What's important to me? And what you'll find is investors want to know exactly how much they're making on their money, but they also want a piece of the action. So I have kind of like a hybrid way that I raise my private capital. I give them a fixed rate of return plus a little equity kicker on the back end. So when they get repaid, they still maintain equity in perpetuity on the deal. So they still get a piece of the, so although they have all their money back, they still get a piece of all the cash flow on an ongoing basis. And they have this little annuity that is kind of paying them every single month. And so they have this nice little cash flow. And then all of a sudden they get a big pop once in a while whenever we refinance or we sell a property. So it's, and so that's one reason. Keeps me sharp in between the ears of how I can lend money and how I can relate to other private money lenders. And the other thing is, dude, it doesn't matter how much money you have. If you get into commercial real estate, you're eventually going to run out of money. You're not going to have enough cash to self-finance every single one of your deals.
Right.
So eventually you're going to have to start raising private money. You might as well do it earlier than later.
Exactly. And one of the things that you were talking about last week is for raising capital, you didn't really do anything crazy or outlandish. You just started putting it out there, like you said, to the universe. You started using Facebook and social media to really get out there that, you were looking in a very threatening way that would be like, I don't want to lend that guy money. But you were out there on Facebook and some other platforms. Do you mind diving in just a little bit on some of the avenues that you did to raise some of the private capital for your apartments? And I know you did some creative stuff too with structuring it with a bank, getting a bank to give you maybe a good chunk of it from a first lien position, and then your investors were going to be in second lien position. Is that correct?
Yeah, so that's typically how I structure it. I typically go get a bank loan, and that's majority of it, because some syndicators go out and they raise 100% of the private money to take down a deal. The issue with that is you're giving up a lot of equity because you're raising so much money. You have to give up 70-80% of the deal to somebody else. I don't like doing that. I'm fine going and signing on a bank loan. I believe in these deals enough that I'll do that and personally guarantee the loan. And that way I only need to raise 20% of the money. So then I can pay a fixed rate of return. Now you can't put additional liens on a property if it's got a bank mortgage on it. So I secure them through the operating agreement, through some other, documentation.
Oh, okay.
The attorney can handle all that kind of stuff. You can just talk to your attorney about that. But yeah, I mean, I think you kind of alluded to it in that when you're raising private money, you don't want to be threatening. Like if you think about, you go hunting, what does the prey usually do? Runs from you, right?
Right.
So what you don't want to do is take a hunting approach when you're raising private money. When you go into any store and somebody comes up to you like, hey, do you need any help? Like you clam up, you're like, no, I don't need any help, even though you don't need a lot of help. I don't know where I'm going or what I'm doing, but I'm going to figure that out myself because I don't want to be sold anything. I don't want to be taken advantage of. I don't want to go down that path. So it's the same thing in raising private money. When you hunt private money runs away from you.
Yep.
Banks and lenders want to lend money to people who don't need the money, or at least act like they don't need the money, who can posture up. It's kind of like the girl you used to chase in high school that never wanted anything to do with you. Like that girl didn't want anything to do with me, and the girls that liked me, I didn't want anything to do with because it was easy. So you're always going for the challenge,
right?
And so that same approach with private money is, listen, I don't need your money, but I have an awesome opportunity. If you want to get involved, great. I have a waiting list of people who want to get, want to be a part of this deal. I'd love to have you involved. If not, no problem. And when you have, whenever you're willing to walk away from a deal, you typically win that negotiation. Does that make sense?
Oh, totally.
So same thing when you're acquiring property, same thing when you're raising private money, same thing when you're talking with banks. That's something that I haven't really done much of until recently, was negotiating with banks. And, these are boilerplate documents, loan documents. We can't change anything on these. Okay, well, if you want my business, you're going to change this, and this clause, because I'm not going to sign these documents unless you take these out. Okay, no problem. Hang on a second. I'll do it. So, but dude, it takes a lot of experience, a lot of confidence, and a lot of doing deals in order to be able to posture up with banks that way.
Yep.
Instead of going through a hunting approach, you want to do more of a fishing approach. When you put the lure in the water, the fish come to you. And so what I've done through social media is just and through my network and through my buyers list is just tell them about deals that I'm doing. You can't ask for money and guarantee returns or do anything like that because you could really fall into like a red zone of the SEC compliance type stuff, Securities and Exchange Commissions. So you don't want to like offer investments, but you can talk about a deal that you just did. Hey, here's a deal I just did. I bought it for X, sold it for Y. My private lender brought in this much, and they earned this much of a return in this type of time frame. And naturally, we live in a voyeurism type society where people are watching, whether they like it, whether they love it, whether they comment on it or not. They're seeing what you're posting, and when you do enough of it, it's not you don't post one time and all of a sudden get a flood of private lenders,
right?
But you do it over time. You talk about deals and you talk about value. You just provide value to people on deals that you're doing. You're walking through a property. Here's how we, harden our properties and to minimize maintenance on an ongoing basis, and do a little video and provide value like that. And people they're just attracted to it. And so every time I make a post now, I get people who either want to sell me deals, buy deals from me, joint venture on deals with me, raise private money or lend me private money, or pay me to coach them. It happens every single post. I get dozens and dozens. I have so many friend requests and messages in my inbox that I can't get a hold of everybody. So if anybody's watching, I apologize that I don't get back to you sooner. But it's remarkable the power of social media. And I'm only pretty much on Facebook. I'm starting to do a little bit more on LinkedIn, and I'm about to plug into Instagram quite a bit more too. And I can't imagine what that's all gonna bring as well.
Oh yeah, you're gonna get blown up for sure, man. No, yeah, it really goes to show, because I've been friends with Tim now for a little bit, and just seeing where you've come just recently, your posts are starting to get so much more engagement. It's crazy. And it really just takes that consistency with being able to put something out every day. A lot of folks may be like, well, I don't have any deals to do. Well, go and start looking at properties, making videos, talking about the properties, and just do something to give value to your friends, your followers on Facebook, LinkedIn, Instagram, whatever it might be. What were you going to say, Tim?
Jason, you're doing it right now. You don't even need to be a guru. I mean, you are, but you don't need to be a badass investor in order to provide value to other people. Go and find badass investors and just invite them onto a podcast or a Facebook Live and just interview them on how they're doing what they're doing. And then all of a sudden, your contacts and everybody who's following you on Facebook are going to be more interested, because now you're providing more value. And all of a sudden, whoever you're following, on this podcast, I'm going to promote this on my Facebook page. You're going to get a lot of followers from my podcast or from your podcast that I'm promoting. And I'm going to get a lot of followers from the podcast that you're going to promote on your page. Yeah. And this intermingling. And, there's going to be some people who want to do commercial real estate who are attracted to me from different podcasts. There's going to be other people who say, hey, listen, I want to do I want to do self-storage. I don't do self-storage, but they're going to be attracted to you because that's something that you're doing. And so, social media is funny, where you're just going to figure out who you want to follow, who you want to spend a little bit more time with, who's providing a lot of value to you, whose personalities mesh, where you want to do deals with this person, right, or at least learn from them. And it's a win for everybody all around in doing stuff like this. But to your point, you don't have to be out doing multi-million-dollar deals in order to gain a following on Facebook. Right. You just bring on and ask people to talk about themselves, and people love doing that.
Yeah, they do. They absolutely love talking about themselves. No, that brings up a valid point. So if you're not already getting out there and letting it go on Facebook, I highly encourage you. Just start going out there, doing some videos. You don't need to do the live ones if you're not comfortable yet on video, but start going out there and doing some stuff. So one last question about this, and then we'll dive in and we'll talk about how folks can get a hold of you. What is one strategy of yours that you would be willing to share with folks on finding good apartment deals?
I wouldn't go through brokers. I'd go off market. Right. So what you'll find in the commercial is very different than residential. It's kind of like the Wild Wild West. Residential has because residential is seen as like a less sophisticated crowd. It might be somebody's only home or first home that they're buying. So there's a lot of rules and regulations across the country that are put in place to protect residential home buyers.
Yeah.
Commercial, everybody's assumed to be pretty sophisticated. So, dude, you can burn somebody pretty easily, and it's like the Wild Wild West. It's unregulated. A lot of it's unregulated. So I'll give you an example of that. So in residential, if you're a real estate agent, you have to put the listing on the MLS typically within like 72 hours of getting the listing.
Right.
Unless the seller signs off that they don't want to list it. In commercial, there's nothing like that. So commercial agents, I mean, you think about an agent, they're going to take the path of least resistance and make as much money as possible on this. So if they get a listing, they're not going to co-broke it. They don't want to list it on the MLS to co-broke it because they want to earn both sides of the commission. So they'll keep it as a pocket listing for weeks or even months at a time without actually putting it on the MLS or on LoopNet. And so a lot of times so they already know who the top 20, 30, 40 buyers are in the local area, and they're banging out phone calls to those individuals instead of email blasting it.
Sure.
So when you see stuff listed on the MLS or listed on LoopNet, typically, and this is I'm generalizing because I list my buildings on the MLS because I know it gets a ton of interaction on it. But typically, if they're a broker, they're not going to list it on the MLS, and they'll only list it if it's a newer agent, a newer broker that's typically residential, and they're just listing. They somehow fell into a commercial listing, put on the MLS, or it's a dog shit deal that the top 20, 30 buyers in town all said no to, and then the agent put it up on LoopNet, and that's where listings go to die.
Yeah, you see a lot of properties on LoopNet.
Yeah, man. They're crap. They're so bad. Now, if it's been sitting on LoopNet for like 3 years, it's been in and out of contract. Like I just picked up a 74 unit portfolio that was listed on the MLS. It was listed for 2.9 million or 2.8 million. I got it for 1.9 million. Nice. Because it was on the market for like several years and was in and out, just sat there, and I just kept on peppering them with a $1.8 million offer every couple of months, and eventually they're like, fine. So there are deals like that you can make happen, but it's not the stuff that's listed immediately. It's usually going to be on the market for a long time. So if you could find off-market deals, find off-market deals. You know, how do you do that? The same way that you find off-market deals in residential. Are you doing direct mail? Are you driving for dollars? Are you calling for rent by owners? Are you calling for sale by owners? Are you going down, hanging out at like eviction court? Are you calling up management companies? Are you calling probate attorneys? Are you calling dude, get to work.
Yeah, absolutely. Absolutely. No, I'm glad you said that, especially with the off-market stuff. We teach a lot of that within our direct deal profits course with finding off-market property. So I'm glad you brought that up because that's a lot of the stuff that we go over. So Tim, what is a really good book that you would recommend that you've read maybe within the last 12 to 24 months? What's like a good book that you would recommend?
I'll show you. Hang on a second. So this is kind of a sleeper book. Not a lot of people have read this or talked about it. I've gifted hundreds of copies of this book before. It's called 12 Pillars.
Okay.
By Jim
Rohn. Jim Rohn. Yeah.
Yeah. So Jim Rohn wrote this book. It's look how.
Yeah.
It's like 100 pages, and you can knock it out literally like in a day or two. It reads super simple. Jim Rohn has like this gift of making things so third grade common sense, and that's what really attracts me. I mean, he's no longer with us, but like he's been a huge influence on my life, and I think that this book, although it's a very simple and easy read, it is packed with profound principles, not only about business, but just about like developing a great life, you know, and leading a life of example, and you know, like my why is I want to show people what a phenomenal, what an extraordinary life can look like. You know, I want to have a dialed-in family life, dialed-in health, a great business, spirituality or nature or universe or God or whatever your spiritual beliefs are, and then always personal developing and always just being the best at everything I possibly can be. not the best overall, just being my best in everything that I possibly can be, and showing what an exceptional life can look like. And so that's really my why and what drives me. And that's a lot of what this book is about. So it's an easy book. You can buy it for, what is it, $10 or something, $12, and knock it out in a day or two. And it's probably the most impactful book on my life, along with, Think and Grow Rich and Richest Man in Babylon and How to Win Friends and Influence People, like all those. But this one really is like the cornerstone. I read this probably 2 to 3 times a year.
Oh man, I'm gonna have to get that. I haven't heard of 12 Pillars before. I'm gonna have to get it.
It's good, man.
Nice. I'm gonna have to do it. The other thing too that I was able to take away from Tim, because not a lot of people talk about this within their business. Everybody just wants to be a workhorse and work 16, 18 hours a day. And one of the things that I'm really big on is having balance in life. I'm a big family guy. I love spending time with my family, and it was really refreshing to hear it from another guy. And what Tim does is pretty cool. He shuts down his phone. Everybody on his team knows. If you're close to Tim, everybody knows. Can't get a hold of Tim after 5 p.m. And I love that. It's awesome. You need to have that in your life. And it's really refreshing hearing it from other entrepreneurs, because, at the end of the day, when you're on your deathbed, are you going to wish you spent another 2 hours working on your business? Or do you want to look back knowing, hey, I spent a ton of time with my family. They know who I am. I'm actually, being with the family, and that, it's just so important. So Tim, that was a huge takeaway that I on top of the tons of stuff that I got as takeaways from you, buddy. That was a really good one. That it's refreshing to hear that from other individuals at your caliber.
Well, I mean, first of all, I appreciate that. And you think about it, like, we just have this false sense of importance. Like, I'm an ego-driven guy. Like, I like people following. I like how many likes I get on Facebook. I like, you know what I mean? Like, that's kind of driving me. But I have this false sense of importance. Like, if I got hit by a bus, everything would still go on. The world would still go on without me. So, like, what's the worst thing that could happen if you turn off your phone at 5 o'clock and you don't pick it up again until 7 o'clock the next morning? Even if I had a building burning down, I can't do anything about it. Insurance company's not even open until 9 a.m. the next day anyway. It doesn't matter. Like, I can't do anything. So, we're not doctors. Like, it's not life or death on picking up the phone or not. And I think it's a false sense of importance of thinking, oh, does anybody need to get a hold of me? Like, who gives a shit? A lot of people, say that their why is their kids and their family. I'm working so hard for my family. I'm doing all this for my kids. The reality, though, is the greatest indicator of your priorities is where you spend your time. And a lot of those people who say that their kids and their family are number one in their life typically aren't spending enough time and spending the amount of time that shows that they are a priority. And so one of the things that I've done, like you mentioned, is I time block. Just like you would we set an appointment to do a podcast, and let's say you take from 10 o'clock to 11 a.m. and you have an appointment. You wouldn't take any phone calls. You wouldn't reschedule any other meetings during that time. You wouldn't double book.
Right.
So I time block from 5 o'clock to 10 o'clock every single night to strictly spend with my family. Like, I don't book any other appointments. I don't go to RIA events. I don't do evening. Like, if anybody wants to meet in the evening, sorry, my family's more important. No offense.
Yeah.
But it's more important meeting with you to talk about coffee and tell you about whatever.
Right.
So, I get this all the time. Like, hey, can we meet? Can we grab a drink for happy hour? No, because happy hour is going to run into my family time, and I have prior obligation. It's already, I have an appointment at 5 o'clock. So, like, all my meetings, and I'm starting to time block in the mornings too, because I've realized that I've kind of neglected my health and I need to work out more often. Yeah. And so I'm starting to time block my mornings too, until about 10 o'clock. And so that way I can read, I can work out, lift weights, burn my dog, spend some time, get my kid to daycare or just hanging out in the morning. Yeah. And then it forces me to work essentially from like 10 a.m. to about 4 p.m. And what you'll find is you'll accomplish probably more than if you worked all day long. Yep. And the reason being is because it forces you to be more productive versus just trying to fill your time with social media or trying to fill your time with, other nonsense or taking a super long lunch. Like, when you have to get a certain amount of work done in 6 hours, you will get a certain amount of work done in 6 hours. It forces you to prioritize and plan a little bit better. And I'm actually more productive by taking hours out of my day than I was before, when I just kind of let my inbox dictate my schedule.
Yeah, I couldn't agree with you more on that. That's awesome, man. And if anything that you could take away from this, take that from it. I know Tim's dropped a lot of nuggets throughout this podcast episode, and I hope you've gained a lot of valuable information. But seriously, at the end of the day, you really need to look at your life and see if you're living a productive life, meaning from all facets. You know, are you working productively? Are you spending time with yourself or with your family, whoever it might be? If you're single or you have a family, you have to have that balance. And I'm like you, Tim. I need to get back into scheduling and time blocking more in the morning. I have done that, but I haven't been good with it. So hopefully by maybe the next 60 days, we'll have a different perspective on that. But I appreciate you being a guest on here. Tim, how can people get a hold of you? I know you're a busy guy, and you're sharing tons of great information on your Facebook page, but do you have like a website people can go to get in contact with you?
Yeah, so I mean, social media is awesome. Facebook is great. I'm sure you'll tag me on this on
Absolutely.
social media. So hit me up, friend me up on Facebook. Love that. Love connecting with people there. And then, I'm always looking for people to joint venture with on commercial stuff. If you're looking to roll into apartment buildings and get into commercial property, I'm always looking for joint venture partners anywhere in the country. As long as you're a great operator and you know what you're doing, you're trustworthy and honest and a hard worker. I can bring the balance sheet. I can bring the liquidity. I can raise the private money. I can get all the financing. I can coach you through how to do that whole thing. And I'm looking to do more deals. So it's a way that I can kind of do more deals without building a bigger team personally, but still be involved in multiple markets across the country. So if you want to joint venture with me on that side, or private lenders, obviously we're always looking for private money, and we're not looking, but talking to private money lenders about deals. We always have transactions going on. So
sure.
We're going to talk about anything on that front. And I do a little bit of coaching. I'm launching actually it's called Commercial Empire, commercialempire.com. And I'm doing that. My first event, I think, is in August 14th through 16th. So I got that going on to just teach people, coach people, mentor people, how I do A to Z training. And you can go to that website. And then if you want to joint venture or hit me up from a private money standpoint, go to my website, which is cleturnkey.com. So like Cleveland Turnkey.com, cleturnkey.com. And that's going to be the best website for any like investment type stuff that you want to do.
And what's the site for your 3-day?
Commercialempire.com.
Commercialempire.com. And Tim's a great guy. We got to spend some time together here not too long ago up in Columbus, Ohio. He's a great guy. I highly recommend, if you're wanting to get into apartments, definitely check out his event. It's going to be awesome. And it's going to be kind of small, right? It's going to be a smaller group.
Yeah, I don't like the big, like massive hundreds of people. So I think we're going to cap it at like, I think it's like 20 people, and then you can bring a guest.
Awesome.
So it'll probably be about 30 to 40 people in the room.
Nice.
And that way it's still intimate enough where we can ask some individualized questions, build a relationship. I can get to know you, you can get to know me, and that way we can, like, if you do come across deals, we can do some deals together too.
Sweet.
So, but dude, I appreciate the kind words. Appreciate what you're doing here, Jason. Like, you're providing a ton of value to people, man, and paying it forward is so important, and it's going to come around and pay dividends long term. So I'm excited for what you got going on too, buddy.
Thanks, man. I really appreciate you coming on and being a guest on today's show. I truly appreciate it. For our listeners out there, make sure, if you enjoyed everything that Tim shared here, and it's a lot of golden nuggets, definitely this is going to be an episode you probably want to go back and listen to again, just because Tim dropped a lot of great information that you could start using and be productive in your business. So if you want to do stuff from a commercial standpoint with apartment buildings, definitely reach out to Tim. He's got a great upcoming 3-day event. I would highly encourage you to attend. If you enjoyed this episode, make sure you become a subscriber if you aren't already, and leave us a 5-star review. We would greatly appreciate it. But if you need anything from us, you can always reach out to us, support@jasonluchesi.com. But other than that, thanks for joining us, and I will talk to you soon. Take care. Bye now.
Thanks for listening. For show notes and links to anything discussed on today's program, visit noflippingexcuses.com. If you'd like to call the show, dial 317-900-1307, 24/7. Leave a message with your first name and where you're calling from, and include your question, comment, or concern. Who knows? You might end up on the air with Jason Lucchesi. If you like the show, be sure to subscribe on iTunes or Stitcher. The links are posted at noflippingexcuses.com. Remember, you can close more deals now, make your own rules, and design and live an amazing life without having some jerk-off boss tell you what to do. Share noflippingexcuses.com with like-minded people you know who are ready for badassery, crushing it in real estate, and enjoying freedom to whatever you like, whenever you like it.